Hey everyone, my name is Christy from the Vancor group, and I'm presenting to you today the Home Buyer Seminar. We were originally supposed to do this seminar at our office, but obviously due to the current situation, we've had to move things online. So the purpose of the seminar was just to provide home buyers with some information about what you need to know before buying a home. So let me start by introducing the Vancor Group. The Vancor Group is a full-service real estate brokerage. We do help buyers and sellers with their real estate needs. We also provide rental housing for both residential and commercial tenants, and we also help investors become wealthy through real estate. So some of the services we offer that are unique to us that other brokerages or agents can't offer is we do offer furnished short-term rentals to our clients. In the event that you would happen to buy a home first or sell first and you're kind of in between homes, we do have this option available for our clients. We also offer a handyman for a day that we can loan out to our sellers to help get those finishing touches done on your home before we list your house. And we offer a team of realtors that work together to serve our clients' best interests. Someone's always available at our office 24/7 to answer any of the questions you might have. So buyers, this is where we do for you. We're going to start here. Free of charge to you, we do provide a home buying specialist who helps you find the perfect home. We negotiate the price and prepare offers for you. We give you priority access to new listings that match your criteria before they go on public sites and MLS. We find you the best rates for a mortgage and the best mortgage broker, and we put our specialized knowledge to work for you. Again, this is all free of charge to our buyers. Using a real estate agent costs absolutely nothing for a home buyer. So now we're going to take a look at the home buying timeline because there is an important timeline that needs to be followed when you're buying a home. We're going to start by looking at researching and planning, and then we'll look at actually the process of finding a home, and then the process of making an offer, clearing your conditions, and finally closing the deal. So let's get started by taking a look at the research and planning step. So when you're searching for a home, what you want to do is you need to make a list of things that you need and want in your future home. So for example, if you would like to have a dishwasher, you could put that maybe in the like section of your list. If you need to have a large fenced backyard because you have a dog or kids that need a yard to play in, those are things that you would like to put on that list. Secondly, you need to research what homes and neighborhoods you want to live in. So for example, you may not want to buy a home that's in an industrial area. If you have children, you want to raise them in a neighborhood with lots of other kids and things like that, then you'll want to make that a priority on your research list as well. And finally, the last thing you might want to take a look at is how things could change in the next 5 years in terms of jobs, in terms of family size, that sort of thing. And the next step in this is planning your purchase. So along with considering how things might change in the next 5 years, you also will need to consider your current budget and lifestyle and how those might change in the next 5 years. So for example, if you're just finishing an education at a university or college, within the next 5 years, you may end up with a job that would provide you with a significant income change. At which point in time, obviously, you'd be able to afford to put more money into a home than what you might be able to afford to put into one now. Secondly, what you want to do is you want to prepare a budget. And from that budget, you want to process a section that gives you an option to save for a down payment and closing costs. These are all important steps in researching and planning portion of looking to buy a home. So here's some budgeting tips that we've put together for you. You want to use a mortgage calculator. So ratehub.ca is a great place to go. They've got a mortgage calculator there that you can use. Once you have a budget in place, then you can use the mortgage calculator to estimate your monthly payments, insurance premiums, and any other costs that might come up monthly for your home. In Canada, you do need a minimum 5% down payment, which we'll get into a little bit later on. Closing costs and land transfers average 1.5% to 4% of your purchase price. So keep that in mind while you're budgeting. And just for your information as well, first-time homebuyers can withdraw up to $25,000 from an RRSP tax-free to put towards the down payment for your home, which we'll also discuss a little bit later. So let's take a look at how much mortgage you can afford. When you're budgeting, you're obviously going to look at what you might be able to afford for a monthly mortgage payment. To determine your maximum affordability, lenders like a bank or a mortgage broker might take into account several factors. So first, they're going to look at your household income of all of the applicants purchasing the home. personal monthly expenses of those applicants, so any car payments, credit card expenses, those sorts of additional expenses they will take a look at. Expenses associated with owning a home. So into that mix, they will consider property tax, condo fees, heating costs, and anything else that would affect your maximum affordability. They will also finally take a look at the amount of your down payment. Now, the minimum down payment, as mentioned, is determined by the price of the home you want to purchase. If the home is $500,000 or less, your minimum down payment can be as little as 5%. And if it's anywhere between $500,000 and 1 cent, all the way up to $1 million, the minimum down payment is 5% of the first 500,000 and then another 10% of the remaining portion. So that would give you a total of 15% down payment minimum that you would need for a home over $500,000. Secondly, we'll take a look at how your credit score affects your mortgage rate. Something banks consider when choosing whether or not you're a decent contender for a home loan advance is your credit rating. The credit rating is a picture of your monetary well-being, and it shows banks their degree of risk in the event that they will loan you cash. So there's 2 credit reporting organizations in Canada. One is Equifax and the other is TransUnion. On demand, the 2 organizations will send you 1 free duplicate of your credit report every year. As well, they also permit you to look into your credit rating whenever you would like for a small fee. It's a good idea to check your credit report every year to ensure that there's no mix-ups on it and get that cleared up, especially if you're looking at getting a mortgage. So what factors go into the credit score? So a big portion, the majority of the portion in your credit score is that you're making on-time payments. So not just that you're making payments, but that you're making them on time. Any late payments can affect your credit score. Capacity used. So for example, how much of the credit that you've been given are you using every month? The length of your credit history, types of credit used, and your past credit applications as well. So all of these come into play with your credit score factors. So here's some simple ways you can improve your credit score. If, for example, you go check your credit score and you see that it's not great, or have been told by a mortgage lender that you need to improve your credit score before you qualify for a home loan, the first thing you can do is make sure that you have at least 2 credit cards or lines of credit being used consistently. So you want to utilize each line of credit or credit card consistently, and you want to take care of the balance every month. As mentioned earlier, you always want to make your payments on schedule and on time every month, and you want to consistently pay at least the minimum payment. On the off chance you can't make the minimum payment, you need to let your loan specialist know immediately because they might be able to help you by extending your payment due date. As is typical, you don't want to utilize over 30% of your accessible credit. For instance, in the event that you have a charge card with a limit of $5,000 and a credit extension with a limit of $9,200, you want to do whatever it takes to not acquire more than $4,970 at any given time. So you only want to use 35% of the accessible credit limit. You also want to establish a long record of loan repayment. So you want to try to not cancel your oldest credit card no matter how little you use it. The more drawn out your record as a consumer is, the better your credit score will be. So hold on to those old credit cards that you have, even if you only use it once or twice a month. And lastly, limit how much you apply for credit. The more frequently you apply for new credit, the worse it looks to money lenders. However, checking your own credit does not influence your credit assessment. So now we move on to step 2, which is actually the process of finding a home. The first step in that process is obviously finding an agent who's right for you. So obviously you want to choose an agent who is experienced, somebody that works full-time, and this isn't just a part-time job for them, and somebody who puts their clients first. Great agents are backed by a team who keeps track of deadlines, paperwork, and third-party services for you so that you can focus on the important matter of finding the right house rather than having to worry about the paperwork and the third-party services that need to be taken care of. Your real estate agent will select homes that are right for you based on your criteria and your budget, and then they can help assess the suitability of each property for your lifestyle and your financial goals. So you want to find the home that's right for you, obviously. You need to look at different options. Do you want a home that's completely renovated and just move-in ready? Or do you want to spend a little less on a home and buy a fixer-upper? Are you a handyman? Do you like to, work on things a little bit at a time? You want to look at location, as discussed earlier as well. You want to look at what's nearby. For example, if you have kids, you'll want to make sure you're in a neighborhood that has lots of parks, schools close by, maybe lots of families with children your kids' ages. You want to look at resale value. What is this home going to be worth in 5 or 6 or 10 years when I sell it? All of these things your agent can help you with. So you may be considering buying a condo at this point in time, and there's a few things that you should know about when you're buying a condo. It does differ a little bit from buying a regular home. There are some things that apply only to buying a condo, one of them being the status certificate. So the status certificate is a legal document that's prepared for you by the condo management company. It basically gives you a snapshot of what bylaws that condo has, the financial position they're in, any relevant lawsuits. Your lawyer, if you go over the status certificate with your lawyer, will be able to tell you if there's any red flags there. And you'll want to work with your agent to resolve any issues that you find in the status certificate. Every condominium corporation has a reserve fund. This is used to manage long-term capital projects like elevator replacements, roofing or window replacements, that sort of thing. And so basically the reserve fund acts as a cushion for emergencies that might come up. There are also condo maintenance fees. These are monthly fees that you'll pay as a condo owner on top of your mortgage fee, which pays for building management, maintenance, and common elements such as grass cutting, snow removal, that sort of thing. The average maintenance fee in Waterloo Region currently is anywhere between $300 to $400 a month. And this is, again, a fee that's charged on top of your mortgage payment. So keep that in mind when budgeting for a new home if you're looking to buy a condominium. Also, the final thing that you would need to know that's important to know about buying a condo is special assessments. So when an unexpected large repair or improvement comes up, such as replacing roofs or windows, the condo board might charge a one-time levy in addition to your monthly fees. A building with a healthy reserve fund, though, will be less likely to do this. So keep all of these things in mind if you're thinking of buying a condominium. Pre-construction homes. So these are important things you need to know when buying pre-construction. If you prefer to have a brand new home built custom the way that you'd like it, these are things that you'll need to keep in mind. Closing delays warranty. So Tarion, which is Ontario's new home warranty program, sets guidelines on how long your closing may be delayed and how or if you'll be compensated. These guidelines will be explained to you by the builder when you purchase your home, and they differ whether you're buying a condominium or a freehold property. Selling under assignment. If you plan to sell your pre-construction property to another buyer prior to closing, you're selling basically the contract that you have with that builder. This is a very complex sale. Your real estate agent can help you understand whether the builder allows assignments, explain the implications, and the real estate agent can also handle the complexity of adjusting the deposits you've already paid and the cash that's due at closing. Now, certain things you get excited about when buying pre-construction is obviously the customization aspect. A major benefit of buying pre-construction is the option to customize the finishes of your new home. So you'll have the ability to choose countertops, cupboard colors, types of flooring, types of faucets that you want in your home, and that sort of thing. It is an investment, so treat upgrades partially as a lifestyle choice you can enjoy, but partially also as an investment towards your future resale value of your pre-construction home. So that brings us to step number 3. We're ready to make an offer. So when you're making an offer, there's many terms of your offer you need to consider. Depending on the competitive nature of the market, you may need to move quickly to submit an offer. In the market the way it is nowadays, there are almost always competing offers on a home. So in that case, having a plan in place and getting a mortgage pre-approval can greatly help you be prepared to negotiate your terms. If you place an offer that's competing with another offer and you've already been pre-approved for your mortgage, whereas the other offer has not been, that gives you the upper hand. So at that point in time, you are a step ahead of the competition, which is where you want to be in today's market. There's a couple things you should know about bidding wars, which, as I mentioned, are commonplace in today's market. There's something called a bully offer. So quickly presenting a strong offer with a strict time limit for acceptance, often just a few hours, can give you an advantage over other buyers who haven't prepared yet. A firm sale is ideally what you want to have when you are in a hot real estate market. Basically, what this means is you are presenting an offer to the seller without any conditions present. So you don't need to sell a home, you don't need to get your financing, even not performing an inspection are all aspects of providing a firm sale to a seller, which again puts you ahead of the competition. So if things go wrong during the offer process, there's always a chance that things could go wrong. So basically, we're looking at you as a buyer acting on good faith. You have a duty to act in good faith when you're clearing your conditions. That means that you have to make a real effort to obtain financing, and you also have to be reasonable about the results of the home inspection and the status certificate review. If we're looking at inspection issues, so if you do ask for an inspector to go through the home, every home inspection highlights major repairs and minor irregular maintenance. If the inspection reveals information that's drastically different from what was expected during the sale, your real estate agent may be able to help you negotiate with the sellers to cover the cost of the repairs. So when it comes to condominiums, as discussed earlier, there's a reserve fund there in place. But as mentioned also, a low reserve fund relative to comparable condo developments is a sign that the condo board has previously been poorly managed. So if you get your reserve fund and it is low, or you see issues in that reserve fund, those can cost you money if a special assessment is necessary, and it can also impair your ability to resell the unit. So those are all things to take into consideration. So at this point, if you're not prepared to proceed with your offer, there is something called a mutual release that your real estate agent will draft that will officially cancel the sale. Your real estate lawyer will also help if the sellers refuse to sign a release and if they refuse to return your deposit. So finally, that brings us to step number 5, closing the deal. And we've just listed here for you a list for each aspect of who takes responsibility doing what in the closing of the deal. So you yourself as a home buyer, you will need to visit the home a few days before closing for a final inspection. You do need to purchase home insurance and have that in place from the day that you move into that home. You'll need to visit your lawyer's office to sign any final legal documents, and you'll need to pay the closing costs and your down payment less your deposit through your lawyer as well. Now, your real estate will arrange your final home visit for you and can also help you arrange insurance, lawyers, movers, utilities, and things like that. Your mortgage broker. Your mortgage broker will discuss mortgage insurance options with you, and it will remit the mortgage money to your lawyer to complete the sale of your home. Your lawyer has perhaps the biggest responsibility at this point in the deal. Their job is to explain the legal documents to you. They can be quite in-depth and lengthy and a little difficult to understand, but a good real estate lawyer will be able to explain all of this to you and put it in layman's terms. Your lawyer will also conduct a title search and purchase insurance on your behalf. They handle the funds transfers between the mortgage broker and the home seller, and they register the property in your name and hand you the keys to your new home. We mentioned closing costs earlier. This is your responsibility to pay. So here's a list that we've provided for you of closing costs that you will most likely incur. Obviously, your down payment. So anytime you make an offer on a home, you will submit a deposit. This will vary based on the price of the home and how much the seller is asking for as a deposit. But whatever deposit money you have paid will be applied towards your down payment. So that will be taken off of the amount that you pay as a final down payment amount. And the remainder of the down payment must be paid to your lawyer before closing can take place. There's also land transfer tax. This tax is based on the purchase price of the property, and that is due on closing as well. Lawyer fees, obviously, you need to pay your lawyer for helping you close this deal. Lawyer fees typically range from $1,500 to $2,000. You can ask your lawyer for an all-in price when you get quotes from them that include the most common expenses like title insurance, disbursements, and professional fees. Title registration and insurance. So your lawyer has to register the title and purchase insurance on your behalf to protect you from any future claims against the title. This expense is commonly included in your lawyer's fee, which, as mentioned above, you want to ask your lawyer about when you're shopping around for which lawyer you'd like to use. PST on the CMHC insurance. So if your down payment is less than 20%, then the PST on your mortgage default insurance is due at closing and it's not rolled into your mortgage. And this is, again, something that your real estate agent or your mortgage broker can help you figure out. Adjustments is the final closing cost that we'll take a look at. So these are costs that you have to repay the seller for any prepayments they made to maintenance, property taxes, or utilities. So for example, if the homeowner has paid a month in advance for hydro, those would be rolled into the closing costs as well. Any reimbursement for the difference between the amount of time the seller was there as to when you had moved into the property. Now, there are some first-time homebuyer rebates in the province of Ontario that we'll take a look at. One is a home buyer's plan. So this allows you to withdraw up to $25,000 tax-free from your RRSP to buy or build a home. To qualify for this home buyer's plan, you must not have lived in a home owned by you or your spouse within the last 4 years, and the money must have been in your RRSP for a minimum of 90 days or 3 months. You can only withdraw the money from your RSP after you have a written agreement to buy a home. So you need to make the offer first, and then you can look at withdrawing $25,000 from the RSP. After you buy the home, then you have to repay the RSP in equal installments over 15 years. If you don't repay the full amount each year, then you owe income tax on the portion you don't pay back. So those are important things to keep in mind. There's also a home buyer's tax credit. You might be able to claim a non-refundable tax credit of $750 on your income tax in the year that you buy an eligible home. To qualify, again, you must not have lived in a home owned by you or your spouse within the last 4 years. And finally, there's a land transfer tax rebate. So if you've never owned a home before, you can claim a rebate of the first $4,000 of the Ontario land transfer tax on your income tax. To qualify, you have to be a Canadian citizen or a permanent resident of Canada. You must use the house as your principal residence for the first 9 months after purchase. So that concludes our presentation of our home buyer seminar online. If you do have any questions, you can feel free to give us a call at 519-219-6222, and we'd be happy to answer any questions you might have. You can also email us at info@vancorgroup.com. That's info at Vancor, VANCOR group.com. And we'd be happy to answer any questions you might have. Thank you for your time, and we look forward to doing business with you soon.